Good morning, traders. It's Friday, March 27th. Taking a look at the charts. Going to start off with a kind of a big picture view and going back to the NASDAQ 2000 market top. Now, let's take a look at this psychology of the market. Now, in the grand scheme of things, last year felt a lot like it was that euphoric stage right here where the market rallied 27% on the year, just ripped to the upside, never looked back, and everyone was just piling into stocks. And then we got this big sell-off here in March. And that was a huge sell-off. Now, back in the day, I'll show you what NASDAQ did. NASDAQ fell 40%, and then it rallied up over the next 5 months, 45%, and then it went into the full-out bear market, started the first real leg to the downside. And this is where everyone gets complacent. They think there's all good value here and all through here, and they accumulate, but more or less is distribution going on, and the market sells off and goes into a multi-year bear market, or at least a year-long bear market. Now, what is interesting about this phase right here that we saw, which is the euphoric rally, everybody piling in, and this sharp pullback. Back in 2000, we saw all the tech stocks, huge funding. They ripped to the upside, caused this massive rally in the stock market. And then when earnings started to roll out and everybody realized there are no earnings, people aren't buying online, it was ahead of its time. Everybody saw the writing on the wall that there are no earnings, so the value of them should be discounted. And that's why once everybody saw these companies were just money pits, the market fell 40% in a very short period of time. Now, if we go to today's market, we've got a similar type of setup. We had euphoric stage last year, market rallied 27%, and then we saw the virus come and the writing was on the wall. Everyone could see that earnings is going to be bad across the board for everyone, including more so individuals and small businesses this time around. And when everybody sees that, obviously earnings are going to be down. The stock market needs to get reevaluated. So everyone sold price. So let's go back to 2000. Here is the 2000 market top. And it's pretty self-explanatory. Here is the euphoric stage, ripping to the upside in early 2000. And then everyone saw what was happening, that there were no earnings. And the market literally in 2 months collapsed about 35%. It ended up having a bounce and then came back, made a lower low to make 40%. But it did end up taking 4 or 5 months of the market kind of moving higher, and it retraced 61%, a measured fib retrace from the high down to this low. It hit that 61 and then it rolled over, and then eventually it broke this level here, and that's when really took off to the downside. It ended up continuing to go much lower after this, but I just wanted to balance the chart out just to give you an idea of this topping phase. So where I think we're at here is this kind of complacency, this bear market rally. I think you can see here rallied 44.2% to the upside, which is a big move, but really it's less than half of this move that we saw, the collapse. So that's kind of where we are. Of course, it was 2000, which is a more or less a decade number, and it played out over the next year or two going forward. And the market has this 20-year cycle that it likes to kind of follow. Now, if we go and take a look over at this year, here's the 2020 market top. Of course, 20 years later, it's also a decade number, which means 2010, 2020, 2030. All these decade numbers typically are turning points or big consolidation patterns. And here we are with the euphoric stage. We had a 32% pullback or crash, and now the market is working its way up, and I think it's got about a 30% upside to the 618 retracement level. And from there, I think we start to see the market sell off, and we could see a pretty big sell off going into late 2021. That's if this pattern plays out similar, which it looks and feels a lot like the pattern. We've broken these previous lows on the chart, just like in 2000. You get some chatter through here, and once you pierce those, then you're going up here for a bear market rally, And ideally, we want to see this market continue to consolidate and work itself higher. And we want to get a nice short signal where we get an inverse ETF and we can play this downside move. Catching a move that drops straight down is very difficult, especially when you're in a bull market because you're not looking to play the downside. In terms of shorting stocks, we're looking to get long bonds. So as this drops, bonds go parabolic, which they did, and we played that. But then the bottom really fell out and it continued to go. But that's unpredictable. That's not the norm. This is just happens to be a major, I think, turning point in the stock market. So you can't catch all those type of moves. So overall, that's where we stand. So let's just go back to the normal charts here. Let's look at the stock market today. SP 500 daily chart down 2.7%. The Dow is down 3.4%. So we're seeing a pullback today. Overall, getting a little bit overextended to the upside. You can see yesterday our momentum short-term cycles topping out. Our longer-term pink cycle still down in this lower zone, meaning it's still in a downtrend. And our long-term cycle, we haven't seen this blue line pull back down here in a long time. It's actually now in a bear market stage. It's below the halfway point on its long-term cycle. So technically, based on cycles, we are now in a bear market phase. Keep in mind, I think this market, maybe it pokes to new lows before it starts to rally and goes 30% to the upside. But overall, this is going to be a pretty wild time still in here. I think we're going to see a lot of chatter, or we're going to see it just rip to the upside, and then we're going to see a lot of chatter and for it to eventually roll over. Now let's take a look over at bonds. Bonds up 0.6% this morning. They're still holding up really nice in this pattern. They are starting to show signs that they've got a nice bull flag here. I think bonds, I mentioned this before, I think bonds will perform fairly well going forward. But overall, the money continues to work itself into the equities market. And we are close to a buy signal on the SP 500. And if we do get a buy signal in the SP 500, bonds could actually still move higher as a safe haven place. So many people got shaken up that bonds are holding their value, even though the stock market has had a nice rally the last couple sessions. Bonds are still holding up because there's a lot of trickling of money from everyone just saying move more to bonds. So bonds are holding up, and they could extend higher with the stock market. But I do feel as though there's potentially more upside in stocks right now than bonds. So that's what we're looking for potentially over the next couple trading sessions. Maybe today. I doubt today. It would be late in the session, but I don't even want to get into the position if we get a signal before the weekend. I'd rather wait till Monday and see what unfolds going forward through the weekend. Let's take a look over at the other safe havens. Gold down 2% this morning, fizzling out of favor. Again, major resistance up here. Sellers are coming in. It had such a strong move. It's just overbought, and it's got to work through this resistance and really just some profit taking at this point. The dollar's down big again today. We've had a couple big down days in the dollar. Gold continues to move down. Overall, it's just not finding its traction yet. Silver down 0.5% this morning. Again, tight little flag, holding above the 5-day. But again, it's in this halfway point here, right where these markets cross these 2 days. It's still in a downtrend at this point. Gold miners, GDXJ, talked about this yesterday. It's in this what looks to be a bearish, overall a bearish formation. The trend is still down. It's starting to show signs that it's getting close, but it's got this rising wedge here. Had another little one right over here, a little bear flag. Sold off, bounced, sold off, broke down. And then now it's trying to put in this bigger bottom potentially, or this larger flag where this could come down easily for another double bottom potential. But overall, we're not looking to get into it. These are 20 to 25% days. This gap right here just a couple days ago, 19% price gap from the open. I mean, these are huge moves where you don't want to hold it overnight if it's moving 19% randomly to the up and the downside. So we're just going to let the market work itself out. Again, we got out right here on this day, right at the high, and it fell 56, 57% to the lows. It just goes to show how significant this resistance was, why we had our target set there. This was a major breakout on the chart and a breakout level. And of course, all of the signals were saying to take the money off the table and get ready for potentially a new setup later, which we are waiting for now. Looking over at natural gas, down 1.6%, nothing significant, still in a downtrend. and we'll look for a bottom sometime later as it forms. Crude oil down 0.3%, still looks really bearish. It is just hanging on by a thread here. At any day, we could see a huge gap or a huge red bar to the downside, and for this to continue to move down. Overall, there's starting to be a benefit to this. I think we've got a record amount of oil rigs that are shut down and on hold for the longest period of time in 35 years or something like that. So I think it'll take some time to eat through the supply still, but overall, things are getting choked off, and we could start to see a rally here. But I think what I'd like to see here, and what I think is going to happen, we're going to see some washout low, quick drop, and then for it to probably put in a strong rally and start to have some oversold bounce or demand kind of based bounce going forward. Let's take a quick look at the US dollar. US dollar, you can see here, huge move up, and now it's moving and waterfalling down. Overall, it's getting right into the heart of all this price action through here, and the 20-day, I have a feeling it's going to start to find support. You can see here the short term and momentum cycle is deep in the lower zone here, meaning they should be bottoming, excuse me, and we should start to see a bounce in price going forward. Some of you want to see platinum. Let's pull up platinum real quick. Platinum selling off again, very similar to gold, silver miners. It's in a clear downtrend. It's had a bounce. It's in this kind of crossover day where it was 3 trading sessions through here. So there's lots of volume. That's where it's hitting its head. It's stuck there. Overall, not interested at this point in platinum. Take a look at palladium. Palladium's had a very strong bounce to the upside. It's actually holding above the 5-day. It's recovered quite nicely, but overall still not that interested in it just yet. Although it is showing signs that we've got an upward momentum here. We're above the 20-day, but again, in one day we could see a 10-20% drop in price. So we got to be really cautious when we're playing with this type of price action. Really, we want to be trading around where we're seeing moves like these, controlled moves and consolidations and breakouts, not 10-20% drops and pops regularly. Really, that's about it for this morning. Let's take a quick look at the VIX. VIX up 10% this morning. Obviously, stock's down 3%. VIX is moving up a bit. But if the stock market puts in a bottom, this here, we're going to see this fear continue to kind of grind its way down and fade out over time. But we may not have seen the bottom yet. We could have a little bit of a double dip before it maybe puts in this potential 30% rally. We'll just have to let the market do its thing. It's random. That's why we're not in it right now. The key is we watch, we learn, we wait for the market to stabilize, and then we'll get into a trade. We'll probably get in with a small position because volatility is still high, and we want to reduce the amount of portfolio volatility in a trade. So we may trade at 10, 15, or 20, maybe 25% of our portfolio because things are moving 5 to 10 times the normal price range. So we got to tone our positions way back to counter that wild volatility. Anyways, that's it for now. Talk to you in a bit. Bye-bye.